a little bit like that, and you had an 80-day cycle which had a shape like that. Okay, then we were looking at a rather miserable shaped kick up from the 80-day cycle. Okay, now is that analysis impossible? No, it's not impossible at all, and that might very well be what is playing out. However, what has happened over the last 3 days, Tuesday, Wednesday, and Thursday, is that the market has kicked up with a tremendous amount of bounce. Okay, when the market moves with that kind of speed, sentient trader sits up and pays attention, because that's a much faster move than we would have expected from what was shaping up to be about a 20-day cycle trough. Okay, so as a result, sentient trader has said this move up from Monday's low, or Monday and Tuesday, they had the same low. This move up from Monday and Tuesday's low is too fast. The degree of bounce is too fast for this to be considered to be a 20-day cycle. Therefore, there is something wrong in this analysis, and it has started adjusting its cycles, its trough positions. Now, this particular analysis, I am still using an expert model, which is positioning the various troughs in the positions that I want to place them. And so it's a reminder that when you have an expert model forcing the sentient trader to adjust its analysis, you need to be constantly aware of that, which is why in the title bar of the chart it tells us that there is an expert model. As a matter of interest, in the new version of Sentient Trader, you can do it a lot more easily by simply pinning troughs, and you can in fact, I can very, very quickly demonstrate to you how easy it is to pin a trough. Sentient Trader won't always accept the pinned trough positions, as I'm probably going to demonstrate to you now, because it decides that in fact your pinning of the troughs isn't perfectly correct. But the important thing to bear in mind is that you have, if you have an analysis which has an expert model applied to it, then you must make sure that your expert model is not preventing Sentient Trader from finding the absolute best analysis. There we go. I've just pinned a trough and Sentient Trader has ignored it. I could go into complicated reasons why that is, but it's because of the cycle lengths which it finds that aren't matching there correctly, and because of that degree of bounce. Now, last week in our AusTrader chat, I started taking a look at the alternates, because as I've already said today, when you have an analysis for your market that differs from the analysis in the US markets, you need to constantly keep comparing them, and you need to ask yourself whether you are really convinced that the analysis of your market is correct, and there's a really good, strong reason why your analyses are differing. If the difference is a degree of about a smaller cycle, then that's nothing really to worry about, and smaller cycle troughs will occur on slightly different dates and so on. When there's a difference between the 9-month cycle and the 80-day cycle, that's quite a big difference, which last week was causing me to start questioning things. So let's take a look at something else that might be happening in the Australian market. And in fact, all I have done with this particular analysis is I have moved the 20-day cycle only ever so slightly over, and as you can see, the only difference with this analysis is instead of positioning the 20-day cycle here on the 6th of March, I've moved the 20-day cycle over to the middle of February. Okay, there's another good sizable trough over there. I made one small difference to this analysis, okay, and the analysis picture is slightly different, as you can see. I constantly say this, and I think I've been sort of emphasizing it in trader chats recently. I constantly emphasize that it's very important that you don't have only one analysis on any particular market, because it's a bit like putting all your eggs into one basket, if you like, if you have one analysis, particularly when your analysis is differing from the analysis in the US markets and the analysis that everybody else is talking about. In Australia, I know we have a lot of non-Australians, but there are quite a few Australians on today's Trader Chat. And in Australia, particularly, I know that there is call it a user group, if you like, of sentient trader users. And I do hope that you are exchanging ideas and exchanging analyses as often as you possibly can, because I think it's very, very important that you exchange ideas. I have been exchanging analyses with people that I've been in touch with for many years, sentient trader users who send me analyses often, and I send them my analyses back again, and we compare them, because if somebody has a different analysis to you, I believe it's very, very important to sit up and take notice and ask yourself whether their analysis might be better analysis. I hesitate to say better analysis, because when you're using Hurst cyclic principles, often it's very hard to distinguish which is a better analysis and which is not a better analysis. If that makes you feel a little disappointed because you can't possibly know what is necessarily the best analysis, you shouldn't be. And in fact, I'm going to sort of summarize everything I'm saying today by explaining to you why that isn't a problem. That is a feature of analyzing markets using Hurst cyclic principles. The fact that you need to keep your mind open to other sort of opportunities, if you like. Anyway, let me talk about this analysis. So last week I took a look at moving the 20-day cycle back from the first week in March back to middle of February, and this is the analysis that has resulted. And this analysis is really very interesting. Let's point out a few things about it. The first thing to notice about this analysis is that although it has a different position for the 20-week cycle, here we go, 13th of February, from both the US markets positioned the 20-week cycle here on the 30th of January, and the other analysis that we have running on the Australian markets, which positioned this analysis in the second week of March. This analysis positions the 20-week cycle in a third possible position for it. Is this the correct position? I don't know, actually, and only time will tell. When we look back, we'll be able to say, well, it's almost certainly that. But as I hope to explain in a moment, it's not really too much of a problem. The next thing to notice about this analysis is that it positions the 80-day cycle here on the 9th of April, and the final thing to notice about this analysis is that it is telling us that it is expecting the 40-week cycle to occur in the Australian markets round about now. Okay, so we have two analyses. Okay, and they are different in terms of what I've had Sentient Trader do in only one respect. That one respect is where we positioned the 20-week cycle. Should it be here on the 13th of February, or should it be here in the second week of March? I should say in the third week of February, or in the second week of March. That is the only difference in terms of the analytical input, if you like. That's the only difference, the positioning of that 20-week cycle. Let's go back and have a look at the other one, and now let's talk about how you need to, it's not that one. Okay, there we go, it's this one here. Okay, so these are our two analyses. This is the analysis that we've been looking at over the past few weeks, which has positioned the 20-week cycle here in the second week of March. Okay, All right. Everything that is done afterwards is done without our inputs. The sentient trader has been doing its own thing. This week, this analysis has encountered a problem, as I mentioned, and that problem is that because the market fell on Monday, it cannot position the 80-day cycle over here, which is where we were moving towards. And so it would therefore want to position that 80-day cycle a little bit earlier. However, the bounce out of that has caused further problems in this analysis, because the bounce out of that is too strong for it to be a 20-day cycle. And therefore, Sentient Trader has been adjusting this analysis every day. Okay. And let's have a closer look at this analysis. This analysis, from being what seemed to be a very good analysis, has started being, in my mind, a fairly questionable analysis. Okay. Look at that positioning of that 80-day cycle trough. I would question that. Look at the position of the 40-day cycle trough. Again, I would question that. Okay? So this analysis, which was our favorite analysis, started encountering problems. In terms of, Sentient Trader is still, of course, analyzing it. It's still working, but it's finding rather questionable positions for troughs of 80-day and 40-day magnitude. As soon as that starts happening, you need to start looking at your alternative options and wondering whether maybe, in fact, one of your alternative options is, in fact, the better option. So that is exactly what we're going to do. We're going to look at our alternative option. And here is our alternative option, which, as I pointed out, has only one difference. Here is the one difference, which is the positioning of the 20-day cycle, which is here in the middle of February as opposed to the first week of March. Now, this alternative analysis, is this analysis having any problems? Well, here is the position of the 80-day cycle. That looks good to me. I don't question that. Here is the position of the 40-day cycle. I do question that. Okay? So there's a question mark there. Here is the position of this 40-day cycle. I don't know. I personally think that the 40-day cycle did occur there in the US markets, as you'll know from our discussions yesterday. And I think John, who raised the issue of the price not crossing the 40-day FLD, is with us again today. And price didn't cross the 40-day FLD, and it didn't again in the Australian market. So yes, there's a bit of a question mark over there. Okay, so we have two analyses. And both of them have two question marks on them at the moment. So how can we work with that? Okay. In fact, we work with it really, really easily, because, and in some ways, I feel this has become the theme of everything we've been talking about in Trader Chat recently. When you are performing an analysis using Hurst cyclic principles, you are not receiving absolute yes/no answers. Okay, Sentient Trader is not a machine where you feed data in the one end and you get an absolute black and white yes or no answer coming out of the other end. It's not an automatic machine. Hurst cyclic principles aren't automatic either, but that does not mean that they don't work. They are, in fact, nevertheless extremely powerful, but they're simply not automatic machines. Why is that? That is because of something that I mentioned yesterday, something that we talk about here at Sentient Trader amongst ourselves. We talk about walking into a trade. Okay, when you make trades using Hurst cyclic principles, you don't just fire up the software, come out with a printout of, okay, here's my trading order, I'm buying now. Okay, although you can operate the software to that kind of degree, but that's obviously not the right way of doing it. What do I mean by walking into a trade? Walking into a trade means that you know what is coming next. I also talk about driving down a misty mountain road. Okay, the map, if you like, is created by Hurst cyclic principles. That's the map.